Welcome to TradeTheNBI.com. This is John's reports for the 22nd, and well, we got a little bit more of that fill back coming back in to fill that positive extreme setup right at the 76% line. You can see in post market here, we're getting a slight dip, and it's just been a complete fall off here of NBI magenta below yellow, and then when it broke below 33, continuation from there, and that was at pretty extreme with our shakeout, and it's getting a little bit softer. But you can see that when we look at it from a steel standpoint here on the DOC, complete reset. So as soon as it pops back above the negative 13.5, you'll get the support that everyone will be wondering whether they're going to show up and actually support the market. But even from a NASDAQ standpoint, we talked about there was a lot of range that had to be filled back in, literally even coming slightly below the 76% line anyway. Here it's interesting with DOC finally getting cyan over red. Uh, Red being up at that 5 level, you got to get down below the 0 before it's a problem. But again, also that same reset. You saw the same thing happen right here when we dip below, and it just means that there's a lot of free cash. So it's one of those where up A, B, kind of C movement, perfectly normal. Nothing too dramatic with their flight back into treasuries from that. Again, crazy setup, but that's just the fleet of safety. And we've been seeing this for quite some time, this irrational pushback up into treasuries, reducing the yield despite where the Fed is when it comes to rates. And there's no change from that standpoint at all. From an oil standpoint, keeps battling back and forth. We get these reasonable moves. It's still pretty consistent within this range. I think it's slightly elevated to what you would need to see for significant economic growth, but it's not creating a hyperinflation. From that standpoint, though, the euro pushing back up towards the highs for no particular reason. I guess the idea being is that there's going to be an excessive amount of easing that we'll have to go through, despite the fact they just raised rates. That just means they'll just print more money to try and prop things up a little bit longer. But get that momentum, and once that starts, it gets everybody moving in one direction, and that becomes a powerful force again without any of these pressures. Gold struggling, but where we've seen the interest was, when a lot of this was, if you on Instagram, some of these other things, you can see that there have been a lot of stories and everything about how BlackRock had made their deal with Coinbase and that to, start providing additional trading vehicles within crypto space. So that's created a lot of excitement within that and the explosion. So we had that turnaround that took place right around the 23% there, and boom, pushed it all the way back up towards the highs, and still looking pretty comfortable from that standpoint. Positive extreme, so we know that we're going to move back to the 50% when they want to shake out some weak hands for the new jump in. ETH slightly behind, but trying to catch up to the Bitcoin movement again. I think that Bitcoin's still going to outperform in general. It's a lot more activity going there. So when we were talking the other day, we were up at the 23%, and we had seen the white NBI spike, so we expected to move back to the 0. And that's exactly what we got. So nothing surprising about any of that. Pretty much exactly in line with our expectation from an intraday standpoint as it came across. Things were fairly even, and then we just started breaking down to check support levels and clear some stops, and then every time we pop back up, and then later in the day is when the sell activation took place a little bit stronger, and there was a lot more supply probably than was expected, and that allowed things to move just a little bit lower. Sort of right in where we were talking about from a daily standpoint a few days back, that would be right around that 44 range, and we're slightly below it at this particular stage. And here in post market, you can see the softness continuing a little bit. So I was just going to take a little bit of new impetus. Do we have anything that suggests that there's funds that really want to jump in at this particular stage? I don't think so. I think they probably going to wait as we get a little closer towards end month, and that will be the opportunity to position as they set up for moving into July. But this is healthy from the standpoint it fills in a lot of that excess positive extreme and reallocates people. And what happens is what we talked about. As soon as there was the exuberance that everything was going to break out, is when you would get some softness that would pull it all back in. And that's the lovely nature of mean reversion, and it's working beautifully at this particular stage. And I think it's just a matter of following that 50K in the transitions, and we'll see when it's about to turn over. When we look at it right there, you still have MBI white leading, but potential for a turnaround and within that. And I think that here it'll be interesting because I'm going to be watching DOC whether or not you get a dip below the previous low. If it starts to pivot up before that, then you know you've got your second buildup. So you'd end up with higher red DOC on potentially lower lows. It's a nice divergence when you get those, and it actually gives you a nice push from there. So we'll continue to follow it. But as always, trade well. Talk to you later.